Big afternoon for the stock market. Amazon, Apple, Coinbase, MicroStrategy, and more. Hey up everyone, welcome to Martyn Lucas Investor. I'm Vaz. Do you know what time it is? It's time to start talking. Power of habit, sorry. Today we are covering, it's time for big closing bell and possibly big move and big reaction on the stock market. Sorry, I got stuck mentally in the previous event when I covered one of the eVTOL companies. So what is the market doing? Well, S&P is slightly down. Nasdaq is 1.2% intraday down. Bitcoin almost 3% down. XRP, big retraction today. How are you feeling? How are you feeling, crypto investors? Are you still feeling safe, or are you getting a bit worried? I would like to know. I saw Martyn had a good discussion with everyone on his X profile. I would like to know your input. Let me know if you are in crypto, if you are getting worried, or if you are feeling safe. Let me just turn the heater off because my feet are boiling. Ethereum down almost 5% as well. Gold is going up 2.5% today, and silver almost 3%. Interesting. Yesterday we had some positive news. Maybe not so massively great, but we had some positive news from Donald Trump meeting President Xi Jinping. Was the market reaction good? Well, probably not as good as we were expecting. What are we seeing here? This is the S&P. We are looking at 15 minute, was it 15, 10 minute, 5 minute candles currently coming to a sell-off before the closing bell. We are 8 minutes away or 7 minutes away from the closing bell. After the bell, few minutes after the bell, we will see numbers for Apple and Amazon. Amazon, as you can see, we are covering Amazon earnings call, but I will be going through the numbers for Apple, Amazon, Coinbase, and MicroStrategy as well. Big crypto players, members of the S&P 500 as well. Apple and Amazon, Mag 7, the 7 biggest market caps. This is number 5 and number 6 out of 7 who are reporting. We had Tesla last week. Not very good reaction, not very good guidance, not very good numbers. Sell-off on the day. And there was a slight reaction on the S&P as well. Yesterday, we had Meta, Microsoft, and Google. Google, Alphabet did very well. Meta, not so well. And Microsoft has been selling off today as well. Although they gave quite solid guidance as well and good numbers. So let's actually have a look at that. We've got Amazon. What is Amazon doing? Amazon, by the way, somebody commented on my layout. I have downloaded the TradingView app. I just haven't had the time to get my head around it. So I would rather show you something I know how to use rather than trying to invent it on the show live. So last few days, you will see this ugly Windows browser Windows configuration, and we'll get to a better layout. So Amazon selling off, slightly selling off for the market close. Let me zoom in for the daily, slightly down. Are we going to have a beat? Are we going to get a guidance and explanation of the layoffs as well? Let's find out. The S&P, as I said, already down. Google, massive upside yesterday. When the numbers came out, 7% up on the closing bell. Very good beat, massive growth between 10 and 20% on all metrics. Very good numbers, very good guidance by Google. But again, sell off today on the market open, and currently we are pretty much to the bottom of today's day. Meta is not doing very well. Look at that sell-off on the numbers out. There was big tax implication. Although they had good income and good metrics as well. Massive tax hit. This is the reaction. I think Meta was up to 12% down yesterday. when we were covering this live, and Bloomberg were showing like 11 or 10% down, and it just kept going. So probably this could be beginning of an overreaction of the whole market. Microsoft, solid guidance. The investors didn't. The investors did digest the guidance. We had a sell-off. There was again like 7 or 6% retraction, immediate retraction, and then it started going up on the earnings call. Then we had some profit taking, going up again, and then it crashed again to the previous low, previous after hours low, and since it's not been recovering. So again, what are we going to see after hours? Well, we have 3 minutes. We are 3 minutes away. 3 minutes away to get to the closing bell and see the reaction after hours. I'm keeping my eye on all the results. I'm monitoring Amazon, Apple, Coinbase, and MicroStrategy. If you want me to focus on any other stock, if you want me to have a look at any other stock, just let me know in the chat. We've got 3 minutes. Let's quickly catch up with the chat. Oh, let me refresh the window. Let's quickly catch up with the chat. Who we've got here? Bear with me. I am just refreshing this. Let me pause it. Right. Who we've got here? By the way, there is a poll. There is a poll. What do you think? Is it going to be a beat, miss, or are you undecided? Take part in the poll. Me personally, I think it will be a beat. So let me close it. I'll close this 2 minutes after the closing bell. So you have your last chance to cast your votes. James is here. He was here first. Thank you for joining. Ninja Cowboy, Missy Leo. When it starts, the numbers will be out in about 5-10 minutes. The earnings call starts on the next hour. So we are about 62 minutes away. Ninja Cowboy, MDL, let's go. You are looking out for positive reaction. That's good. Big pump incoming soon. Cheps 312 says I sold. Ninja Cowboy. What's that? Is that pizza slice? Or is it watermelon? I was in crypto, sold up, says Benji Watson. Did you make money or did you sell for loss? Good evening, Ninja, says James. Today, very bad market. Chep says, let's go Amazon. Let's go. Do we have any Amazon investors? Let me know if we have any Amazon investors. Don't tell me how much money you've invested in Amazon. I don't want to hear that. But tell me your average. Tell me your average with on Amazon. I'm very interested. Tran Hoa says, let's go. Big market crash coming, says Benji Watson. Tran Hoa sees different. The market took back some wins, but it will run up again, says Cheps. Troy Thomas sees a crash. James says, please smash the like button. Thank you very much. If you hit the like button, there will be a benefit for you. The more likes we get under the video, the more YouTube will promote it and push it out. The more YouTube pushes this out, the bigger audience we get. The bigger audience we get, the better feel for the sentiment and for the mood around the market you can get. You have a poll running in the chat already. We have 58 people voting. Last night we had a poll with 500 people voting on Microsoft. The more people we get in, the better feel, the better specimen we can get. And the market is coming to a close. So we are 15 seconds away. 15 seconds away. Let me bring this up. Let me open my volume levels. We are 5, 4, 3, 2, 1. There we go. There we go. Is it loud enough? I hope it is. So the market is closed. At the S&P, what is the S&P doing? Currently holding. Let's have a look at the big chart. Let's have a look at the big chart. I'm not playing Phoenix yet, by the way. I'm not playing Phoenix, but I will. I will get the track. Let's have a look at the S&P, where is it? There it is. So after hours, are we going to get a retraction or not? Nothing is happening yet. We might get a slight upside, slight recovery. Amazon, what is Amazon doing? We are a few minutes away from the numbers. Currently holding the daily low, around $223. So let's see when the numbers are out. This could have a good run all the way to 240 if we have some good numbers. What's next? Google, following from yesterday. That is a big candle. Look at that. Not candle. That is a big spike in volume. Look at that at the closing bell. Wow, that's interesting. Meta, no reaction on the market close. Microsoft holding its levels. Interesting. So, the S&P coming back up. Let's have a look at the whole market. S&P recovering, Nasdaq recovering, Bitcoin keeps crashing. Bitcoin keeps crashing, XRP keeps crashing. Wow, 6.3%. When we started, we were just above 5%. Ethereum crashing as well. It was below 5%. Now we are almost 5.5%. Gold going up and silver almost 3% on the day. Wow, that's interesting. That's very interesting. What do you think of the market? Let's have a look at the poll. I'll quickly finish the chat with you. What we've got some averages from you, some numbers coming from you. So what is the average? Amazon 229, says Bali JD 4GT. Is that your civil name? It's not, is it? Benji Watson, I do think Nvidia, Tesla and Amazon will do well long term. Short term market pullback. Tran Hoa says 229. Giraffe Lenses, I like the name, 227.7 average in Amazon. The 17, that's not your average. Oh, that's time. Yeah, I did. Ring in more. Do you want me to ring it again? Vazio new bell is good. Well, thank you. I have a virtual bell. I didn't order live one, but I might get a replica of the New York Stock Exchange one. I will have it behind me. I'll be spinning the big wheel so it rings. But this is the very replica of the, or this is the very record of the New York Stock Exchange bell. Do you want me to ring it again? I'll give you a little teaser just because you liked it. Right, that's enough. Amazon up. So do we have the numbers out? Let me close the poll. So what do you think? 75% think it's a beat, 14% expecting a miss, 11% undecided. Let's have a look. The S&P is pulling up. What is Amazon doing? And look at this massive candle. And I told you it would hit 240 and we are 246. Wow, that is massive. So let's have a look at the numbers. What was the consensus? What was the estimate? I've got it somewhere in my notes. Let's have a look. I'm trying to recall it. Where are my notes? 157 expected earnings per share and 177.8 billion revenue expected. So let's have a look at the numbers. Do we have, just checking Amazon's website. We don't have the numbers out yet from Amazon. That's interesting. By the way, yesterday I had to wait for Meta for like an hour to appear, for the numbers to appear on their website. So let's do this. Let's use good old friend Google, Amazon earnings. Let's have a look what we've got. Amazon earnings. Don't have any news yet. Is it so fresh? I don't see any news. Yet. Do you see anything? Martin says huge beat. And the stock is rallying up. We are now 247. Wow, that is a big rally. What we've got here, I'm trying to find some numbers. Let's check Earnings Hub if they have the numbers in. I'm refreshing Google. I can't see any news articles yet. Does anybody know what is the earning per share? Let me know. Amazon earnings. I can't see anything yet. What is going on? Let's check I tell you what we're gonna do. We're gonna check our good old friends at Bloomberg. Let me get this up and running for you. Whoa, bear with me. I will get this up and running for you. If in doubt, ask Bloomberg. Well, it's not financial advice. Yeah, don't take this as a financial advice, but let me get this up and running for you. Let's see what Bloomberg is doing. Wow, Amazon, massive rally tonight. That's a massive reaction. Let's see what Bloomberg are saying. Let me unmute it.
Quarter over quarter.
And let's get the numbers from the horse's mouth.
$17.42 billion versus $17.41 billion year over year. The estimate, $19.72 billion.
All right, Zillow dropping in the aftermarket. Let's go to the numbers. Third quarter revenue, folks. That's a beat. 600.
Wow, that's interesting. Somebody says 1.95 earnings per share. That is a massive beat. That is a massive beat, guys. And did I hear the revenue 119? Did I hear it right? Wow, that is good. That is good. We can see a good reaction. We can see a good run after the hours. What we've got here? What is the S&P? S&P is recovering. All right, very nice. Let's have a look at the chart. Nasdaq recovering from the losses as well. Bitcoin holding, XRP and Ethereum sticking to these levels. Gold and silver going sideways currently. So let's have a look at the chart for the S&P. Wow, you can see the reaction. This is what Amazon did. What about Apple? Oh, I don't have Apple. Oh, I don't have Apple chart. Let me fix it. Trading view. Oh, whoa. By the way, those who just joined, we are covering everything tonight. We are covering mainly Amazon earnings call, but we are looking out for Apple, Coinbase, MicroStrategy. We are following the whole market because tonight we have 5th and 6th out of the max 7 companies releasing their earnings call. So let me quickly get Apple on the screen. Let's see what Apple has been doing. Is Bloomberg... Coinbase beat as well. Coinbase is up 1.606%. Not massive, but it's steady. Let's wait for the guidance. Apple, what is Apple doing? I need to refresh this because it's not talking to me. Ooh, Apple is a beat as well. Look at Coinbase is very volatile now. Look at this. It was up 1.06. Then it dipped to minus 1 point something. Now it's up 3.5, 4.99. Wow. So Coinbase very volatile, waiting for the guidance. Let's have a look at Apple. What's going on here? Apple have not released their numbers yet. No, they... All right. It looks like Apple will be releasing their numbers late. That is very interesting. Well, let's have a look. Amazon is cooking. Very good run. A very good run. Those who invested, I saw your numbers. Are you happy? Let's start a poll. I want to hear from you. Are you up on Amazon? Let's put plus 10%. Your overall position, not today, yeah? Just your overall position. Plus 5%. Plus 5%. Sideways. Is that an option? Does it make sense? Well, no profits. And then add option down on Amazon. Let me know. I'm starting a new poll. Let me know in the poll under the chat. I want to hear from you. Are you making money tonight? Are you happy? Are you excited? Because I can already see votes coming in. Plus 10%. Wow. Let me know in the poll. Don't forget to hit the like button. You are watching the whole market tonight, but we are covering Amazon, their earnings call. It will be starting in about 50 minutes, 55 minutes. We are also covering Apple numbers, which are not out apparently yet. We are covering Coinbase, we are covering MicroStrategy and more. So, what is Amazon? We have some profit taking. This is natural. I wouldn't be surprised if this continues on the good guidance. Apple, we seem to have very long green candle. So let's check the numbers. I am now checking Bloomberg. Oh yeah, obviously commercial break. So bear with us. Let's get through the commercial break. Let's check the Amazon numbers. So I am checking now. Apple, not Amazon. Did I say Amazon? I said Amazon, didn't I? I'm checking Apple. Fourth quarter earnings. Listen to the conference. Where is the number? Let me check this. We've got conference and webcast. We don't have the numbers out. We do have no. Right, let's bring up Bloomberg. I'll be working in the background. In the meantime, let me know if you are up on Amazon or not. In the chat, there's a poll. Let me know. I will leave it open for another 5 minutes, and then we're gonna start another one because you seem to be liking this. So I want to hear from you. Apple earnings. Let me find out. Apple to report. Oh, right. I can't see any numbers for Apple yet either. Apple out yet either. Can anybody see Amazon? Can anybody see Apple? Apple to report fourth quarter. No. I can't see anything. I'll keep searching. Let's keep Amazon up 8.6%, still holding the levels. What is the whole market? Do we have a reaction on the at
$100 this year?
No, you can buy shares. You can buy pieces of stock.
You don't believe
Apple is pulling up.
I think back
I'm trying
in the
to find the numbers.
back in the day,
Amazon,
it made a big difference, but now
some
that all
profit
these retail
taking, but it
brokerages
will
offer-
hold this level unless we have some very poor
whenever I
guidance.
say
I
this,
don't
people
think we
interact
will.
with me online and they talk about options.
What is the S&P doing? Holding this nice little run up. Let's see what it's going to do. Google.
All right, good stuff. Anyway,
continuing the sell-off.
Hey, let's
That's
get
interesting.
back
There's
to
no
Amazon,
reaction in
because
the
that
other
stock
Max
is soaring in
7
the
stocks.
aftermarket. Putin Goyle is Bloomberg
Meta
Intelligence senior analyst for
not
e-commerce
copying,
and
and Microsoft not copying this upside either. Very interesting.
God, Puna, this looks
Let
like a
me
really strong
just
report
see if we have
on a lot of metrics.
Amazon 8.45 up now.
They hit it out of the park. Sales were very good across the board, across all business segments, AWS, online, advertising, even physical stores. So from a top line perspective, very, very encouraging results. In fact, AWS was probably the bright spot here. 20% gains. We haven't seen that in a while. On the margin side, I think AWS did really well. But then when it came to North America margins, they were weaker than we expected. So it's the only one area that I saw some skepticism. And I think that's largely due to their ability to want to maintain low prices to make sure the consumer keeps coming back and investing in its fulfillment.
So you think that margins took a hit because Amazon is keeping prices low? Why?
I mean, they want to drive market share gains, right? So if you think about what's happening in retail this year, tariffs have clearly added to costs, and many retailers have decided to offset those costs through efficiencies to try to keep and hold prices steady or raise them selectively. So that could be part of the pressure. And then also, Amazon
Apple numbers are not out yet, but we can see on the chart Apple is having a good run. Look at this. Apple is having a good run. So I keep searching. It looks like Apple will be reporting their numbers in about 15 minutes. So stand by. Bloomberg is not showing Apple numbers either. They are showing Amazon. It's up almost 9%, but we are not showing Apple. So let's see what they are saying.
Everything in the sense that the cloud computing division accounts for the majority of operating income, right? And this return to growth year on year of above 20% for the first time since 2022, it's absolutely timely. I think Google gave us a lot of evidence that GCP, their cloud offering, has a lot of momentum at the moment. But this is a bit of a barnstormer from Amazon to say, actually, on every metric that we track, AWS is doing really well. One of the headlines that you spotted, really excellent, the appreciation in their investment on Anthropic, that had a non-operating income impact to the bottom line, right? But also they're talking a pretty fierce game about their custom training chip, Trainium, too, and calling it a multi-billion-dollar business. And what we've seen in the past is when Amazon hasn't necessarily put a specific dollar figure on something, but said this AI thing is in the billions of dollars, the market has given them a lot of credit for giving us at least like a little bit more detail there.
Ed, where does the Trainium 2 model fit in?
Well, we will definitely hear some more guidance on the call. Let me just put this on mute for a bit. We've got the numbers, we've got the figures and guidance from Amazon, so we will do the same as we did yesterday. We'll go through the first section, we'll go through the numbers, and then we'll move on to the next stock. We'll move on to probably MicroStrategy or Coinbase. Let me just quickly refresh this, see if I'm coming. The audio is loud and clear. I've got a little monitor here so I can hear myself. So Amazon, we've got numbers out. We've got numbers out and the guidance. Amazon.com today announced financial results for its third quarter ended September the 30th. The net sales increased 13% to 180.2 billion. Let's see what Amazon is doing. Let's have a look at the stock chart. Amazon is currently holding. There was some profit taking, but Amazon is currently holding. And you know what? In the meantime, let's close this poll. Let's close this poll as well. We've got 60 Amazon investors. We've got 60 Amazon investors. Let's have a look. Let's have a look. What is your result and how happy you are? We have 78% of very, very happy investors who are 10% up. We have 5% of happy investors who are 5% up. We have 5% sideways and down. 7% is down. Well. Have a look at the chart. You might be turning into profit tonight. But that is very interesting. Are you happy? Are you happy with Amazon? Do we have any questions or do we have any reactions? So happy. Yeah, everyone is so happy. I love it. If you're happy, there's a little heart button right next to me, somewhere here, there. If you click on it, if you tap on it a lot, I can see it. It glows up and it's giving good reaction to YouTube as well, that you are happy, and it promotes it to more people. Because when we have better engagement, more people come in and you can share your thoughts and you can share your emotions with the other investors as well. I mean, last night we had great chat between few investors, and I have learned a lot. I was listening to the call and I have learned from, I can see the hearts and the emojis coming through. I love it. But I've learned a lot. I was listening to the call and I was reading through the chat, and I have actually learned a lot about the company as well and the sentiment around the company. So definitely the more people joins us, the better sentiment feel and better outcome we get. Yeah, massive beat. Martyn says, I put $300,000 into VU on the dip, all in just 30 minutes ago. Wow. Martyn, have you taken any profits yet? Have you made any money? Amazon is going up, by the way. Amazon is pushing up again. So those who said you are even or you are negative, you might be making money tonight. Donda, 1.95 earnings per share. Yes, Smiley E50. Thank you for the update. Huge beat. Yes, I agree. Tesla, we'll have a look at Tesla shortly. Tonight we are gold. My Amazon is cooking. Let's go, says Vanessa. Congratulations. Hit the like button. Yes, definitely. Thank you for the support. I'm happy after the hit I got from Meta. Yes, it was a bit painful yesterday, wasn't it? Tranhoa is so happy. Retrack. See, I sold my Reddit calls and bought Amazon calls. Well, congratulations. Just ordered a Lambo, says Silverback. Everyone is happy. Giraffe Lenses says sold off at the top. It's a natural reaction. Look, it's sold off, but it's now slowly pushing up again. I wouldn't be surprised if on the good guidance we are going to get through the initial high. Ninja Cowboy is up. Texas Guns making money, baby. I love it. Iconic. Let's go Amazon. I need that after FIServe. What that is down for. Do we have any more? Yeah, we have many more happy investors. Amazon CEO, AWS re-accelerating to 20.2% year over year. Amazon's chassis, AWS growing at pace we haven't seen since 2022. Why would there's a question, why would Microsoft stock react to Amazon beating their earnings? It's just the whole market. It's just the whole market could be piggybacking because the sentiment could be good. If Amazon has massive beat and Apple has massive beat, it will definitely impact the S&P. And who is in the S&P? Who is on top of the S&P? And Microsoft didn't give any bad guidance yesterday and didn't have bad numbers. So I wouldn't be surprised if Microsoft could react to this. Retailers are eating the costs, says JPro or iPro. Chaps sold the run and moved to Woo. Congratulations. We have the poll results. Now we have to decide if I want to sell now or hold and see if it goes up a bit tomorrow, says Vanessa. 210 average for John Stevens. Congratulations. Made 22K with Amazon, says Bogdan Vasile. Congratulations. Is it realized or unrealized? That's great. That's massive number. iPro says, I think that guy from yesterday made that call. Why Netflix flying up? Well, we can have a look into that. David Hensley is doing his moderator part. Thank you very much. Let's have a look who Amazon is holding. Amazon is holding. Let's have a look at Bloomberg. And then we will have a look at the...
Still doing Amazon.
Well, how do you read into this report in the context of the layoffs that we learned about earlier this week? Did Amazon need to do those layoffs? Do you see it as a directional shift for the company?
This will be the main
Obviously,
topic of the earnings
well
call
with this same headcount.
I mean, you're going to hear more and more of this, and I don't love that as a consumer investor, but the reality is when you're implementing AI through your business and you're obviously serving other companies doing the same thing, right sizing of your headcount is a big part of the story. And so with robots in warehouses, plus all the typical right sizing, I mean, it's a very large company, a very large employer. So I think we're going to have to hear about that across most companies, certainly deploying AI because they're getting a lot of efficiencies and might not need the same kind of people.
Hey, Ed, I know you're doing double duty for us and for our TV team, but, I'm just thinking about all these names, these hyperscalers, these big tech that have been reporting. As Anurag Rana said, they're not apples to apples, even though we sometimes,
we're getting Apple in 7 minutes.
We pull them together, and Ed's going to be back, too, to talk Apple with us. But how are you thinking against kind of the big cap
Right, that's
names?
Bloomberg for now. Let's have a look at the... Let's have a look at the guidance from Amazon and we will start fishing for the Apple numbers. Tesla currently down. Somebody suggested Tesla. Tesla is down on the day. No reaction after the closing bell. So Amazon net sales increased 13% to 180.2 billion in the third quarter compared to 158.9 billion in the third quarter of the previous year, excluding the 1.5 billion favorable impact from year-over-year changes in foreign exchange rates through the quarter. Net sales increased 12% compared with third quarter 2024. That's great. North America segment sales increased 11% year over year. International segment sales increased 14% year over year. And AWS segment sales increased 20% year over year to 33 billion. Operating income was 17.4 billion in the third quarter compared with 17.4 billion in third quarter previous year. Third quarter 25 operating income includes two special charges, 2.5 billion related to a legal segment with the Federal Trade Commission and 1.8 billion in estimated severance cost. Is that severance? Cost primarily related to planned role elimination. Without these charges, operating income would have been 21.7 billion. Do we have net income? Net income increased to 21.2 billion in the third quarter, or $1.95 per diluted share, compared with 15.3 billion or 1.43 per diluted share in third quarter previous year. Operating cash flow increased 16% to 130.7 billion, and free cash flow increased to 14.8 billion for the trailing 12 months. Wow. So we will have some more guidance. Let's just let's leave it for the earnings call. Let's see if we have Amazon numbers out already. Let's see if we have Amazon numbers out. Apple, sorry. Let's see if we have Apple numbers out, because I'm thinking of Amazon chart. My brain is in autopilot mode and I'm talking what I'm thinking. So let's have a look at Apple. Do we have any numbers out yet? I don't think we have, because Bloomberg is not showing anything. So let's try good old Google. Apple earnings. Excuse me. Still can't see any numbers on Apple, so it will be delayed. That should be coming out in about 4 minutes. So let's see what Apple stock is doing. We can see a massive run. Well, it's not massive. It's not massive at all. But in the small scale, in the after hours, it is up. What is the S&P doing? Consolidating currently, and will be going sideways until we get the Apple numbers out. Google slightly going up. See, you have reaction now. It's going up. Meta is flat, and Microsoft slightly going down. Okay, so let's see Amazon. I will check out Coinbase in the meantime and MicroStrategy. I could see Coinbase numbers. Out already as well on the Bloomberg cast. Yeah, this is a funny one, because they don't look at this. They have their investor relations page, very nice graphics. I like the colors, by the way, orange and black. Top color theme. But I can't find any like numbers apart from the filings. I can't find anything but their live webcast. We're not covering this; it's not live yet. Anyway, so let's try Google. What Google is saying. Coinbase. Sorry, that was MicroStrategy. MicroStrategy earnings. Let's have a look what the numbers are from MicroStrategy. Count it down, Vaz. You need a timer like Sensei to Apple earnings. Well, I might be able. No, I'm not doing it. I'm not doing it ad hoc. I've got a timer, but I would need to switch my camera to my monitor, because I've got a timer on the monitor. Not doing it tonight, but thank you for the suggestion. I will do it for the next time. We are about 30 to 33 minutes away. By the way, MicroStrategy. I can't see any numbers on MicroStrategy either. Let's have a look at the stock. What is MicroStrategy stock doing? Trading view. Oh, wrong one. Trading view. Oh, you can see my search history on my live on the screen. Oh, that's very secure and not intimidating at all. MicroStrategy, what is the ticker? MSTR? MicroStrategy. Are we doing stock? Nasdaq. Numbers are not out yet. No, they are out. Hang on. Numbers are out. I'm mixing it. Numbers are out for MicroStrategy, but we don't have the result. Right, so let's keep looking for MicroStrategy. Bloomberg is still showing Amazon and talking about the layoffs and the AWS. MicroStrategy. MicroStrategy is a beat 842. Thank you for that. J-Dubia, am I saying that right? J-Dubia UK. Thank you for that. What was the estimate? Hang on. That's something is not right. here on TradingView. I believe you. MicroStrategy is a beat, 842. Let me just see if we can find some more accurate information. This is interesting. This is interesting. I can't see the numbers anywhere. Apple is dropping. Chep says Apple is dropping. Let's have a look at Apple. Let's have a look at Apple. Go away. Let's have a look at Apple. Oh, that is big. That is big. 8.5%. And we are hearing from Bloomberg.
I'm looking at iPhone revenue, 49.03 billion. That's up 6% year over year. Fourth quarter EPS, $1.85. That is 8 cents better than what the street was expecting. So that's coming in better. Services revenue, 28.75 billion. That is better slightly than what the street was expecting. 28.18 billion was what the street was expecting. And we're looking at shares of Apple down about 2.9% here in the aftermarket.
Yeah, worth repeating these results. Fourth quarter Greater China revenue coming in big miss there, $14.49 billion. The estimate was for $16.43 billion. Fourth quarter EPS coming in above estimates at $1.85 a share. All important services revenue coming in above estimates too. A beat there, $28.75 billion. A beat on fourth quarter Mac revenue at $8.73 billion. And then, as we heard just now from Carol, fourth quarter revenue coming in just above estimates at $102.47 billion. The estimate was for $102.19 billion. Shares fell as much as 3% in the after hours. As we speak now, about 2.8% to the downside.
So let's get to also a big number, because they were expected to show 100 billion in revenue for the first time, and indeed we did get that. Apple fourth quarter revenue 102.47 billion. That is better than what the street was expecting. They were looking for 102.19 billion. So again, that's a big number for them. The street's still not so impressed. You've got Apple shares down about 2%.
China
here.
was a big miss. I mean, China that was $14.49 billion. The estimate was for $16.43 billion. Certainly, investors happy to see that iPhone revenue come in at 6.1% to increase versus last year at $49.03 billion. But still, that China, a big miss there.
Hey, I do want to go back to Eric Clark for just a moment.
Could you see this reaction? Can you see this candle? This is what Apple did. And you are saying, why is Microsoft not reacting? Well, the whole S&P, look at this little crash we had, immediate. It's not a crash, but an immediate reaction. Google, slightly pushing up. Meta is flat. Microsoft, flat. Apple, massive reaction to this. And we have Tesla, slightly up. MicroStrategy is up after hours. I can see somebody is showing the numbers. Thank you very much for that. Thank you for helping me. This is why I love this show and I love this audience, because we are all working together. You are part of the show and you are here with me and you are making the show great. I mean, every show I've got great audience, but today we are really working together as a team. I love it. So chat updates. DJT is so cheap, that has 2.3 billion of Bitcoin, that has other assets that people buying at the close and in after hours. Say Michael Anthony. Chaps, VU will go up if Apple performs well. Well, you could see that candle, but VU seem to be recovering. The S&P. Michael Anthony, did anyone see any good earnings before the open this morning? I didn't. I know Shell. Was it Shell? Shell or BP? BP had a good earnings and massive buyback again as well. But other than that, I haven't seen any. Smiley says not yet out. Well, we got the numbers in the meantime. Count it down, Vaz. I will for the next show. Thank you, chaps. Good suggestion. I'm retired, my guys, says Jensson Sharabai. You were here with us yesterday. Thank you for joining again. I love it. Are you? Have you subscribed? Are you subscribed to the channel as well? Ninja Cowboy, his timer has no batteries. Shut up. I love it. I love it. MicroStrategy is a beat. I've got update on MicroStrategy. Somebody did a good research there. We killed it today, says Yenon Sharabai. Yes, I know. We sold our call option. Congratulations. Chaps, Apple is dropping. Yes, we covered it. Yeah, you said it right, Vaz. I don't know why I said. Oh yeah, J Dubia. J Dubia. Sorry, I forgot it. Apple is crying, says Smiley. MicroStrategy is not beat. We've got numbers from Jay Boysev. Apple, we've got estimate 185 per share. Hang on, I need to format it in my head. Oh, sorry, earnings per share, Apple 1.85, estimate 1.77. That's a beat, but revenue is not a massive beat. 4Q services revenue slightly up against the estimates. Greater China revenue is down. Strategy announces third quarter 2025 results and reaffirms 25 guidance. Third result, 3.9 billion operating income, 2.8 net income, 8.42 diluted earnings per share. Okay, that's great. 20 billion Bitcoin gain. Some good numbers. Vanessa, thank you for that, Jay Boysev. Vanessa, MicroStrategy reported quarterly earnings of 8.42 per share, which missed the analysis consensus estimate of 10.57 by 20.32%. Wow. Thanks for that, Vanessa. Songs for Spaces here. There will be a payday. Hallelujah. He loves it. That's great. Congratulations. But MicroStrategy is complete clown world. Robinhood estimate for MicroStrategy says 578. Yeah, you can find a lot of different numbers. Martin says Apple beat, but it was crashing. Let's have a look at the stock. What is Apple doing? Let's have a look what Apple is doing. MicroStrategy currently coming slightly down. Tesla is coming up after hours. That's interesting. Apple flat down. I can't see a new candle. What is going on? Let me refresh this. There we go. That's a different story. Now, Apple. So the investors saw the Chinese revenue, sold, overreacted, and now everyone's buying back again. That's interesting. That's very interesting. We could see a good rally. Look at Amazon touching the previous peak of the run. I wouldn't be surprised if we just break through and go higher to 250 and above. S&P is loving this. Let's have a look at the rest of the market. S&P also on a daily is down. It's recovering. Nasdaq recovering. Bitcoin is slightly going up. Excuse me. XRP and Ethereum recovering as well. Gold. I think gold is holding and silver is slightly sideways, slightly down. Chat, do we have any more questions? MicroStrategy is down over 11%. Hang on. So I've got, don't you tell me my thing is not working again. MicroStrategy, let's refresh it. No, it is working. Am I looking at the right MicroStrategy? Vanessa says it's down over 11%. I'm confused. Let me know in the chat. Am I looking at the right MicroStrategy? I am. MSTR. Shall be at, but not down a couple percent. This night has been 6 months in the making. I hope you are all winning, says Martin. Well, let's have a look. Let's have a look at the poll. I'm creating a new poll. Are you up after hours? Are you up after hours? Just your overall portfolio. Don't tell me any stock. Tell me your portfolio. Let's put plus 10%, plus 5%, flat, and negative. Let me know in the chat, in the poll. Let me know in the poll. I want to see it. Are we making money tonight? Are we having a good time? Let me get rid of it from here. Apple going back. Yes. There was a nice bounce back. I'm watching Bloomberg. No more update from them. They just keep washing off the China miss. DJT shares so cheap that shares should rebound tomorrow, being up, not having 2.3 billion of Bitcoin that President Trump owns 52% of the company, much higher. Apple, good game. Apple just bounced back. Yes, I'll bring up the chart in the very second. I think we may be going bear market, guys. I wouldn't be surprised. Martyn is happy. Martyn is making money. Tran Hoa says he's up. My Amazon calls are printing, says Rose YJ1HM. I'm deploying capital, but red as hell, says Songs for Space. Ninja Cowboy is up. Martyn says, Michael, be careful. No value in DJT. There is no intrinsic value in DJT. I agree with Martyn. Let's have a look at the charts. So we've got MicroStrategy. Let me bring up Coinbase as well. Trading View. Let me bring up Coinbase as well. Coinbase Global. What is Coinbase doing? Right, that is interesting. We had a very steady reaction. It went up, and now it's back to the previous, almost to the previous levels on the market close. Wow, that's interesting. I'll try to fish some numbers and some guidance. So MicroStrategy, Tesla is pulling up after hours. Apple, great recovery. Look at this. So we had a crash. We had a crash of, what was it, 4-5%, and now we are coming back up again. Wow. And we are not coming back up, we are breaking through it. That's very interesting. What is Amazon doing? I think Amazon will go higher once we get the guidance. The S&P seem to be liking it. Martyn is making money. Everyone is printing money. I can see your votes coming through. I will leave it on for another 5 minutes, and we will have a look. In the chat, I can see there's not enough votes. In the chat, we have many more people. In the chat, have a look. There's a poll. Are you up after hours? Plus 10%, 5%, flat, or are you down? Let me know. I want to see if people are making money tonight. Google is flat, slightly up. Meta. The Meta is frozen. Yeah, Meta is slightly going up, and Microsoft is frozen as well on the chart. Microsoft is bouncing up and down. Right. Jason Toe says tomorrow looks like a setup for sell-offs tomorrow. I wouldn't be surprised. Where is our Amazon? Right. So let's have a look. Go. What we've got on Bloomberg. If we
not expected when they originally announced the iPhone Air, they anticipated a September release alongside the other models. That model has been doing decently in China since it was released just about a week ago now. The other thing to point out is the seesaw you saw. Originally, the stock dipped on the China development, and maybe iPhone sales weren't as strong as some had anticipated. But Tim Cook told news outlets that got pre-briefed on the Apple earnings results earlier today that the December quarter would grow 10 to 12% on an annual basis, which is obviously a fantastic jump for them. That is a year-over-year growth in the holiday period we have not seen for a very long time. and Apple hasn't provided guidance in a very long time because of COVID and everything that's happened since then. So it's pretty significant.
Yeah, shares up 2.9% as we speak right now. Mark, just one more question for you, and then I know you got to run. On China and the big miss on China, you said it's not too surprising, yet still came in 12% below consensus estimates. I'm not going to say Apple should throw in the towel in China, but how vulnerable is Apple in China?
They're certainly vulnerable in China, but they have obviously a big retail portfolio there of about 50 stores. As I've said multiple times, they need to start launching products that are specific to the Chinese market. They still don't have their AI strategy together in China. And so we'll see once AI is implemented in iPhones in China next year, if that begins helping turn some things around. And we'll see, we're going to have some pent-up demand in China now for the current quarter, the first quarter of the holiday period, because the iPhone Air didn't go on sale in September during the September period.
All right, Mark, we know you got to run over to the TV side, so appreciate you jumping on with us. Mark Gurman, he's Bloomberg News Managing Editor for Global Consumer Tech. Really, as we remind everybody, our go-to on Apple, breaking all these exclusive.
Interesting. I've ended the poll, and I wanna hear from you this. I'm very intrigued, very interested in this, and I never get the right answer. I never get to the bottom of it. I never see the end of this question. So let me know in the chat, what mobile or cell phone do you have? Are you Apple? Are you Android? Or do you have something else? Because I never get the right answer. I never see the end of the question. So let me know in the poll now in the chat. Are you in Apple? Do you have Android? Or do you have anything else? Should have put both as well, but let's see. I can already see majority are in Apple. It's not so definite. It's not so definite. Let's have a look through the charts. Let's see. I am eyeing Bloomberg if we have any updates. Let's have a look at the charts again. Coinbase. I've got numbers from Coinbase here on the screen. Coinbase had a massive, not massive, but good reaction up, and now it's sold off. MicroStrategy recovering from the upside, slightly selling off. Tesla is up, pushing up after hours. Apple, good recovery, good save. Well, if it's doing this, there might be good run on the guidance as well when the call starts. Amazon pushing up. See, I told you it will push up, and if we have a good guidance, I think we will break through 255 easily. S&P seem to be liking this. What else we've got? We've got Google. Let me refresh it. Google should be more moving. Yes, Google went up. See, this is the reaction. Apple released good numbers. Amazon released good numbers, and the rest of the S&P is reacting. Look, Meta, Microsoft, the only one who didn't react that much. Let me refresh it if there's no there's no lag. Okay, fair enough. What are the overall markets doing? S&P, nice recovery, almost, well, on the way to be flat on the day. Nasdaq, good return as well. Bitcoin, XRP, Ethereum, sideways. Gold and silver, slightly. Silver is up, gold is sideways. Very interesting. I've got numbers from Coinbase, so let's have a look. Coinbase Global, the first crypto company to find a spot on the S&P 500 index, shared its earnings for the third quarter 2025. The company reported $1.5 in earnings per share, beating estimates by 45%. Launched by Brian Armstrong in 2012, Coinbase is the leading crypto trading exchange in the US, which serves over 100 million users today. The company went public on Nasdaq in 2021. Okay, we know this. Do we have any more Well, that's some good piece of news. Okay, let's find some more. Let's find some more. MicroStrategy. We've got numbers from MicroStrategy. So let's quickly go through MicroStrategy, and I will keep looking for Coinbase updates and for Apple numbers as well. We are about 12 minutes away from the actual earnings call for Amazon. We are covering Amazon, as you can see above, but we are now watching and eyeing and living the whole market, the whole stock market. Are you excited? Well, I am. I'm full of energy. I'm full of energy after yesterday. I had 5 people joining. I had 5,000 people joining me last night, and I think we are on a good track to match it tonight. So thank you very much for joining me. You are helping me a lot. I love your engagement in the chat. I love your engagement in polls as well. It's now coming more close. Apple and Android, and somebody voted. You got something else. Let me know what operational system you are using on your phone. If something is still up and running, let me know. I'm very interested, because I thought market is dominated purely by Apple and Android, but clearly we have somebody using something else. Let me know in the chat. I'm very, very intrigued. So MicroStrategy posted earnings per share of $8.42 in third quarter, driven by mark-to-market gains on Bitcoin. Bitcoin's action of late hasn't been great, but the price did rise nearly 7% in the 3 months ended September the 30th, boosting reported profits for Michael Saylor's firm. MicroStrategy earnings per share for the third quarter was $8.42 thanks to rise of Bitcoin price. The company's Bitcoin holdings rose to 640,031 Bitcoin at the end of September. Strategy, this is just a massive number. Strategy re-included previously withdrawn guidance about not issuing common stock when the MNAV fell below 2.5x. Strategy, the largest corporate holder of Bitcoin, reported net income of $2.8 billion, or earnings per share $8.42 for the third quarter 25. Led by Executive Chairman Michael Saylor, the company continued to execute its aggressive Bitcoin accumulation strategy, fueled by proceeds from common and preferred stock issuance. Strategy increased its holding to 640,031 Bitcoin by the end of September from 597,325 Bitcoin at the beginning of the quarter. Wow. Okay. The third quarter profit came thanks to a rise in the price of Bitcoin from roughly 107,000 at the beginning of July, just about 114,000 at the end of September. Investors, however, weren't so kind to MicroStrategy, which saw about 14% decline in share price over those 3 months, as the market cap premium over the value of its Bitcoin holding fell sharply. It's a tumble that's accelerated during October, with shares plunging another 20% this month, including a 7.5% drop today alongside Bitcoin return to below 107,000. No doubt, tomorrow morning, Sensei will be talking about this. There's a lot of material for Sensei. So if you join Sensei tomorrow, he will explain, he will talk about it tomorrow, about MicroStrategy, about Coinbase. He will explain the logic, and I can see somebody else voted again for something else. What operational system do you have in your phone? I'm very intrigued. Let me know in the chat. And let's have a look at that right now. I will leave the poll on for another 5 minutes, but let's have a look, because I want to get to the bottom of this. I want to know if we have majority of Android or iPhone users, and I want to know what else you have in your phone. I just got new phone, $179. Apple can eat my nice one. Android, I don't like Apple, says James. I got the iPhone Air and it's freaking awesome. I tell you what, I've been always, well, I was a big fan of Symbian. If you remember Nokia's that previous operational system, Symbian, it was a great system. However, couldn't work on the evolving user interface, touchscreens. It was just too much for it. So obviously the market dominated by Android and Apple after the BlackBerry fall as well. And I've had Android since. I always had Android. I had Android on my tablet as well because I'm a big fan of Sony. I still keep saying nothing can beat Sony in picture presentation, in their displays and in their visuals. Nothing can beat Sony. And I had Sony tablet. I had Sony laptop as well. And then they stopped manufacturing the Sony tablets. And I had my contract. I could renew my contract, and I got offer on iPad. And I've had this iPad, what is it? iPad 9. I've had this for, it works as my monitor, by the way. I've had this for probably 4 years. I'm happy with it, but I still can't use it properly. I feel like I'm 60 years old who's given a new tech gadget, and I can just turn it on. I can open YouTube. I can do some basic editing, basic operations, but I can't use the full potential. I'm still using like 40% of it because I can't get my head around the operational system. And I'm only 34. So I'm a bit, yes, that iPad, I can work with that, but I couldn't have iPhone. I would be struggling. I would be lost. So James doesn't like iPhone. Golden Pocket says, I got the iPhone Air and it's freaking awesome. Nick Hutchinson, Apple. Vanessa is on Android. Songs for Space. Apple phone was... Is that a typo or did you say it on purpose? Was 1700. That is a lot, yeah. Ninja Cowboy, Android. Apple is a good paperweight. Right. Vanessa says, in fact, my carrier company is Google FI. Love it. Good. James is in Android. Never had an Apple phone and never will. Always Android. Ninja Cowboy, he agrees. JM Molly, the company is called Strategy now, not MicroStrategy. Thank you for the update. I have learned something. See, this is why we need more people to be engaged with us in the chat, on the event, and we are talking and we are learning from each other. Thank you, JL Molly. The technology Apple use in its devices is okay, but it's the Apple software I don't like. Exactly, it's the same with me, James. I don't like, especially if you use old Apple devices. Who else we've got? Songs for Space. It's insulting how expensive the iPhone is. Well, people keep buying it. They stopped research and development when Jobs died. It's a greedy company with no innovation now. Anybody else in silver long term, says Nick Hutchinson. Sab is here. Thank you for joining. Great numbers all around today in tech industry. Yes. Do we have Apple is pumping? Apple is pumping. Well, let's have a look. Let's check it out. Apple is pumping. Coming to the earnings call. Coinbase is coming up. Strategy. See, I'm learning. Strategy is coming down. Tesla up, coming up. Apple, let's refresh it because I don't trust it. Apple is up. Ooh, nice. So the same sell-off we have already recovered from it. We already did the same move up, and now we are still keep moving up. What is Amazon doing? Amazon is touching $250. The S&P likes it, now going sideways, waiting for the guidance from Amazon and Apple. Google is up, recovering the pre-closing bell sell-off. Meta slightly up, and Microsoft is coming up. Look at this long green candle. Right, we are about 2-3 minutes away. Let me start up the webcast. Let's put this on the screen so we are watching the markets freshly. Let me start up the webcast. Where are we? There we go. I've got presentation as well. I like it. Very good. I like it. Can I hear? It looks like we have already started. No. We've got jazz music. I can't play the music for you, but we will have nice little presentation. How about that? Are you excited? Well, let's end the poll. We've got oh, look how it's corrected and leveled itself. Well, now we have 49% Apple, Android 48%, and something else, another operational system 3%. So I'm none wiser. Right, the earnings call is now starting. Let me put it on and let's watch and listen.
We will conduct a question and answer session. Today's call is being recorded. And for opening remarks, I'll be turning the call over to the Vice President of Investor Relations, Mr. Dave Fildes. Thank you, sir. Please go ahead.
Hello, and welcome to our Q3 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, October 30th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We saw strong growth across our business in Q3, and we're reporting $180.2 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $17.4 billion, but would have been over $21 billion if not for two special Q3 expenses: $2.5 billion for an FTC settlement and $1.8 billion for estimated severance costs. Trailing 12-month free cash flow was $14.8 billion. I'll start with AWS. AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2% year over year, our largest growth rate in 11 quarters. It's worth remembering that year-over-year percentage growth is a relative term. It's very different having 20% year-over-year growth on a $132 billion annualized run rate than to have a higher percentage growth rate on a meaningfully smaller annual revenue, which is the case with our competitors. Backlog grew to $200 billion by Q3 quarter end and doesn't include several unannounced new deals in October, which together are more than our total deal volume for all of Q3. AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality, security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead. I'll share a little more detail on why. It starts with AWS having much broader infrastructure functionality. Startups, enterprises, and governments want to move their production workloads to the place that has the broadest and deepest array of capabilities. AWS has more services and deeper features within those services than anybody else and continues to innovate at a rapid clip. These are key building blocks for anything that customers want to create, and they're a big part of why Gartner has named AWS leader in its Strategic Cloud Platform Services Magic Quadrant for 15 consecutive years. We're bringing the same building block approach to AI. SageMaker makes it much simpler for companies to build and deploy their own foundation models. Bedrock gives customers leading selection of foundation models and superior price performance to deploy inference into their next generation applications. A lot of the future value companies will get from AI will be in the form of agents. AWS is heavily investing in this area and well positioned to be a leader. Companies will both create their own agents and use agents from other companies. For those building their own, it's been harder to build than it should be. It's why we launched Strands, to make it much easier to create agents from any foundation model that builders desire. For companies who successfully built agents, they've hesitated putting them into production because they've lacked secure, scalable runtime services or memory or observability built specifically for agents. It's why we launched Agent Core, a set of infrastructure building blocks that allow builders to deploy secure, scalable agents. Ericsson used Agent Core to deliver AI agents across their workforce. Sony used it to build an agentic AI platform with enterprise-level security, observability, and scalability. And Cohere Health is using Agent Core to deploy agents that will reduce medical review times by up to 30 to 40%. Agent Core's SDK has already been downloaded over 1 million times, and our builders are excited about it. It's an enabler. Companies will also use others' agents, and AWS continues to build many of the agents we believe builders will use in the future. For coding, we've recently opened up our agentic coding IDE called Kiro. More than 100,000 developers jumped into Kiro in just the first few days of preview, and that number has more than doubled since. It's processed trillions of tokens thus far, weekly actives are growing fast, and developers love its unique spec and tool calling capabilities. For migration and transformation, we offer an agent called Transform. Year to date, customers have already used it to save 700,000 hours of manual effort, the equivalent of 335 developer years of work. For example, Thomson Reuters used it to transform 1.5 million lines of code per month, moving from Windows to open source alternatives and completing tasks 4 times faster than with other migration tools. Customers have also already used Transform to analyze nearly 1 billion lines of mainframe code as they move mainframe applications to the cloud. For business customers, we've recently launched Quick Suite to bring a consumer AI-like experience to work, making it easy to find insights, conduct deep research, automate tasks, visualize data, and take actions. We've already seen users turn months-long projects into days, get 80% plus time savings on complex tasks, and realize 90% plus cost savings. And for contact centers, we offer Amazon Connect, which creates a more personalized and efficient experience for contact center agents, managers, and their customers. Connect has recently crested $1 billion annualized revenue run rate, with 12 billion minutes of customer interactions being handled by AI in the last year, and is being used by large enterprises like Capital One, Toyota, American Airlines, and Ryanair. These are real practical results for customers, and there are many more examples like them. Because of its advanced capabilities, security, operational performance, and customer focus, AWS continues to earn most of the big enterprise and government transformations to the cloud. As a result, AWS is where the preponderance of companies' data and workloads reside, and part of why most companies want to run AI in AWS. To enable customers to do so, we need to have the requisite capacity, and we've been focused on accelerating capacity the last several months, adding more than 3.8 gigawatts of power in the past 12 months, more than any other cloud provider. To put that into perspective, we're now double the power capacity that AWS was in 2022, and we're on track to double again by 2027. In the last quarter of this year alone, we expect to add at least another 1 gigawatt of power. This capacity consists of power, data center, and chips, primarily our custom silicon Trainium and NVIDIA. We've recently brought Project Rainier online, our massive AI compute cluster spanning multiple U.S. data centers and containing nearly 500,000 of our Trainium2 chips. Anthropic is using it now to build and deploy its industry-leading AI model, Claude, which we expect to be on more than 1 million Trainium2 chips by year-end. Trainium2 continues to see strong adoption, is fully subscribed, and is now a multi-billion-dollar business that grew 150% quarter over quarter. Today, Trainium is being used by a small number of very large customers, but we expect to accommodate more customers starting with Trainium 3. We're building Bedrock to be the biggest inference engine in the world, and in the long run, believe Bedrock could be as big a business for AWS as EC2. And the majority of token usage in Amazon Bedrock is already running on Trainium. We're also continuing to work closely with chip partners like NVIDIA, with whom we continue to order very significant amounts, as well as with AMD and Intel. These are very important partners with whom we expect to keep growing our relationships over time. You're going to see us continue to be very aggressive investing in capacity because we see the demand. As fast as we're adding capacity right now, we're monetizing it. It's still quite early and represents an unusual opportunity for customers in AWS. I'll now turn to stores, where the team continues to deliver and innovate for customers across our key priorities: selection, low prices, and convenience, particularly fast delivery. We're offering 14% more selection since last quarter from popular brands like The North Face and Charlotte Tilbury, and we've added hundreds of thousands of items from popular brands this year. Everyday Essentials continues to grow quickly, and year-to-date is growing nearly twice as fast as the rest of the business. We continue to make it easier for customers to order low-priced perishable groceries from Amazon, and customers in more than 1,000 cities and towns now can shop fresh groceries alongside millions of Amazon.com products with free same-day delivery. This is a game changer for customers who can now order milk alongside electronics, check out with one cart, and have everything delivered to their doorstep within hours. The team also invented a new Add to Delivery button that lets customers add items to previously scheduled orders, and it's been used more than 80 million times since launch, and it just launched. It's an example of one of those seemingly simple but powerful innovations that make customers' lives easier. We remain committed to staying sharp on price and meeting or beating prices of other major retailers. In July, we had our biggest Prime Day event ever, with customers saving billions of dollars across more than 35 categories. We continue to break records on speed. We're on track to deliver at our fastest speeds ever for Prime members globally once again this year, and we've started rolling out 3-hour delivery in select U.S. cities. We're also continuing to invest in infrastructure to speed up rural deliveries and serve more customers in more communities. That includes committing over $4 billion to expand our rural delivery network across the U.S. These are small towns where people want fast delivery, but where other companies have been backing out and reducing service. In contrast, we've already increased the number of rural communities with access to our same-day and next-day delivery by 60%, reaching roughly half of the total communities we plan to expand to by the end of the year. The stores team is also innovating rapidly with AI. For example, Rufus, our AI-powered shopping assistant, has had 250 million active customers this year, with monthly users up 140% year over year, interactions up 210% year over year, and customers using Rufus during a shopping trip being 60% more likely to complete a purchase. Rufus is on track to deliver over $10 billion in incremental annualized sales. Here are the highlights. Our generative AI-powered audio feature that combines product summaries and reviews to make shopping easier has expanded from hundreds of products at launch to millions of products, and millions of customers have used it, streaming almost 3 million minutes. And Amazon Lens, an AI-powered visual search tool that lets customers find products with their phone's camera, a screenshot, or a barcode, now includes Lens Live, which instantly scans products and shows real-time matches in a swipeable carousel. Tens of millions of customers are using Amazon Lens each month. Moving on to Amazon Ads, we're pleased with the continued strong growth, generating $17.6 billion of revenue in the quarter and growing 22% year over year. We see strength across our broad portfolio of full funnel advertising offerings that helps advertisers reach an average ad-supported audience of more than 300 million in the US alone. We also continue to be excited about our demand-side platform, Amazon DSP, which lets advertisers plan, activate, and measure full funnel investments. Last quarter, I mentioned our partnership with Roku, and we've built on that with a partnership with Netflix, providing advertisers using Amazon DSP with direct access to Netflix's premium ad inventory. We announced integrations with Spotify and SiriusXM. With Spotify, we provide advertisers with direct programmatic access to a global audience of more than 400 million monthly ad-supported listeners. And with SiriusXM, brands can reach 160 million monthly digital listeners across services like Pandora and SoundCloud. And we're excited about the advertising opportunity around Prime Video Live Sports. Live Sports got a lot of interest from advertisers in upfront negotiations for 2025-26, and we exceeded our own expectations for upfront commitments with significant growth across the board. Finally, we're continuing to innovate for advertisers with AI. For example, in September, we announced an agentic AI tool in Creative Studio that plans and executes the entire creative process in a matter of hours instead of weeks. We're also inventing and seeing strong momentum in several other areas, and I'll mention just a few. In Prime Video Live Sports, NBA on Prime tipped off last week, and our opening night doubleheader averaged 1.25 million viewers in the U.S., a double-digit increase over last season on cable. You'll see us bring the same constant innovation here that we brought to our NFL broadcasts. We're adding golf with the Masters in 2026 and a new skins competition with the PGA Tour on Black Friday this year. And we've added Peacock and Fox One to Prime Video's add-on subscription offering of over 100 channels in the U.S. We continue to be energized by the response to Alexa Plus. Compared to what we call the classic Alexa experience, Alexa Plus customers are talking to Alexa 2 times more. Those interactions are much longer, and they're covering a broader range of topics. They're using Alexa Plus on Fire TV at 2.5 times the rate of Classic, using natural conversation to discover audio content 4 times more, engaging with photos 4 times more, and customers are completing 4 times more shopping conversations that end in a purchase. We've expanded the number of Project Kuiper satellites in space to more than 150, and delivered over 1 gigabit per second speeds in tests with our enterprise-grade customer terminal, the first commercial phased array we know of to clear that threshold. Finally, Zoox robotaxis are available to riders in Las Vegas, and we've announced Washington, D.C. as the 8th testing location. We're excited for these to continue rolling out to more riders. Q4 is one of our busiest and most energizing times of the year, and we're excited about the continued demand for AWS, the innovations we'll announce at reInvent in December, the positive customer response to our AI-powered experiences, all the gifts we'll be delivering throughout the holiday season, and a lot more.
Rally building up.
Thanks in advance to our teammates around the world who are gearing up to deliver for customers once again. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Starting with our top-line financial results, worldwide revenue was $180.2 billion, a 12% increase year over year, excluding a 90 basis point favorable impact of foreign exchange. In Q3, we reported worldwide operating income of $17.4 billion. This operating income includes 2 special charges, which reduced operating income by $4.3 billion. The first charge of $2.5 billion is related to a legal settlement with the Federal Trade Commission, which impacts the North America segment and is recorded in the other operating expense line. The second charge of $1.8 billion relates to severance costs for role eliminations and impacts all 3 of our segments. The severance charge is recorded primarily in the technology and infrastructure, sales and marketing, and general and administrative expense line items. Excluding these 2 charges, worldwide operating income would have been $21.7 billion, or $1.2 billion above the high end of our guidance range. Moving to our segment results, we remain encouraged by the innovation our teams are delivering for customers across all 3 segments. In the North America segment, third quarter revenue was $106.3 billion, an increase of 11% year over year. International segment revenue was $40.9 billion, an increase of 10% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year. We continue to prioritize the inputs that matter most to our customers. In the third quarter, our sharp pricing, broad selection, and fast delivery speeds continue to resonate with customers. Customers appreciate the ability to quickly receive items essential for their daily needs, including perishable groceries, and have them delivered in the same day. Our millions of global third-party sellers continue to be important contributors to our vast selection, which helps customers find the items they need at competitive prices. We're committed to building innovative services and features for our sellers, including our ongoing advancements in generative AI. Today, more than 1.3 million sellers have used our generative AI capabilities to more quickly launch high-quality listings. Better listings translate into better traction with customers, and in Q3, worldwide third-party seller unit mix was 62%, up 200 basis points from Q3 of last year. Shifting to profitability, North America segment operating income was $4.8 billion, with an operating margin of 4.5%. Excluding the $2.5 billion charge related to the legal settlement with the FTC, North America segment operating income would have been $7.3 billion, with an operating margin of 6.9%. North America segment operating margin also includes a portion of the severance charge. International segment operating income was $1.2 billion, with an operating margin of 2.9%. Excluding the impact of the severance charge, international segment operating margins expanded year over year. Globally, our progress on key inputs is delivering a better customer experience while driving a more efficient cost structure. For example, we're making notable strides in improving inventory placement to speed up delivery to customers. And as a result, for the third year in a row, we are on track to deliver our fastest speeds ever for Prime members in 2025. We continue to tune and improve our fulfillment operations, and our regionalized network is operating at scale. We see many benefits from our inbound process improvements, including a reduction of U.S. inbound lead time by nearly 4 days compared to last year. This allows us to be more efficient with our inventory purchasing, which benefits working capital. We're also placing inventory more strategically throughout the network. And by leveraging our existing infrastructure, we're now offering U.S. customers the ability to order perishable groceries and receive them the same day in as little as 5 hours. We're seeing positive early results. Since launching in January, when customers start shopping fresh groceries on Amazon, they are visiting the site more often and returning twice as often as non-perishable shoppers. Looking ahead, we see further opportunity to improve productivity in our global fulfillment and transportation network. We will continue to improve inventory placement to drive down distance traveled and touches per package. We will also build on the gains from our regionalized network through algorithmic improvements, as well as launching robotics and automation. While operating margin may fluctuate quarter to quarter, we have a deliberate approach to achieve sustained progress over the long term. Shifting to advertising. Advertising revenue was $17.7 billion, and growth accelerated for the third consecutive quarter. We continue to see strong growth on an increasingly large base as our full funnel advertising approach of connecting brands with customers is resonating. Moving next to our AWS segment, revenue was $33 billion, up 20.2% year over year. This is an acceleration of 270 basis points compared to last quarter, driven by strong growth across both our AI and core services and more capacity which has come online to support customer demand. AWS revenue increased $2.1 billion quarter over quarter and now has an annualized revenue run rate of $132 billion. AWS operating income was $11.4 billion and reflects our continued growth coupled with our focus on driving efficiencies across the business. We are expanding our data center footprint, largely to accommodate Gen AI, and to the extent those assets were placed into service, the related depreciation does impact our margins. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. Now turning to our cash CapEx, which was $34.2 billion in Q3. We've now spent $89.9 billion so far this year. This primarily relates to AWS as we invest to support demand for AI and core services, and in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. We'll continue to make significant investments, especially in AI, as we believe it to be a massive opportunity with the potential for strong returns on invested capital over the long term. Additionally, we continue to invest in our fulfillment and transportation network to support the growth of the business, improve delivery speeds, and lower our cost to serve. These investments will support growth for many years to come. Looking ahead, we expect our full-year cash CapEx to be approximately $125 billion in 2025, and we expect that amount will increase in 2026. I'll finish up my remarks with net income. While we primarily focus our comments on operating income, our third quarter net income of $21.2 billion includes a pre-tax gain of $9.5 billion related to our investment in Anthropic. This investment activity is not related to Amazon's ongoing operations and is included in non-operating income. We're encouraged by the start of the peak season, and we are ready to serve customers in the coming months. I want to thank our teams across Amazon for their hard work as we get ready to delight customers during the holiday season. Our commitment to elevating the customer experience is the only reliable way to drive sustainable value for our shareholders. With that, let's move on to your questions.
This is the most important part of the whole call. We got the numbers, we got the guidance. Now we will get questions from the investors, from analysts, and this is unprompted, something unique. Every single call, we learn something new. Don't go anywhere.
To initiate a question, please press star, then 1 on your touch-tone telephone at this time. Please hold while we poll for questions. And our first question comes from the line of Justin Post with Bank of America. Please proceed.
Great, thank you. I'll ask on AWS. Can you just kind of go through how you're feeling about your capacity levels and how capacity constrained you are right now? And then on your prepared remarks, you mentioned Trainium 3 demand and maybe broadening out your customer base. Can you talk about the demand you're seeing, outside of your major customers for Trainium? Thank you.
Yeah, on the capacity side, we brought in quite a bit of capacity, as I mentioned in my opening comments, 3.8 gigawatts of capacity in the last year, with another gigawatt plus coming in the fourth quarter, and we expect to double our overall capacity by the end of 2027. So we're bringing in quite a bit of capacity. Today, overall in the industry, maybe the bottleneck is power. I think at some point it may move to chips, but we're bringing in quite a bit of capacity, and as fast as we're bringing it in right now, we are monetizing it. And then on the Trainium demand outside of our major customers. So first of all, as I mentioned on Trainium 2, it's really doing well. It's fully subscribed on Trainium 2. We have, it's a multi-billion-dollar business at this point. It grew 150% quarter over quarter in revenue. And you see really big projects at scale now, like our project Rainier that we're doing with Anthropic, where they're running they're training the next version of Claude on top of Trainium 2 on 500,000 Trainium 2 chips, going to 1 million Trainium 2 chips by the end of the year. As I mentioned, we have today with Trainium 2, we have a small number of very large customers on it. But because Trainium is 30 to 40% more price performant than other options out there, and because as customers, as they start to contemplate broader scale of their production workloads, moving to being AI focused and using inference, they badly care about price performance. And so we have a lot of demand for Trainium. Trainium 3 should preview at the end of this year with much fuller volumes coming in the beginning of 26. We have a lot of customers, both very large and I'll call it medium size, who are quite interested in Trainium 3.
And the next question comes from the line of Brian Nowak with Morgan Stanley.
Thanks for taking my questions. Congrats on the quarter, guys. So maybe two. One, Andy, sort of a philosophical chip question. There's a lot of questions in the market about Trainium and sort of its positioning versus other third-party chips. So how do you think about the key hurdles with Trainium 3 you need to overcome to really make Trainium adoption broader, to your point on the last question, and continue to drive Trainium, as opposed to satisfying what could be broader demand with third-party chips in the near term?
Yeah, well, first of all, we're always going to have multiple chip options for our customers. It's been true in every major technology building block or component that we've had in AWS. Really, in the history of AWS, it's never just one player that over a long period of time has the entire market segment and it can satisfy everybody's needs on every dimension. And so we have a very deep relationship with NVIDIA. We have for a very long time, and we will for as long as I can foresee the future. We buy a lot of NVIDIA. We are not constrained in any way in buying NVIDIA, and I expect that we'll continue to buy more NVIDIA both next year and in the future. But we're different from most technology companies in that we have our own very strong chip team, and this is our Annapurna team. And you saw it first on the CPU side with what we built with Graviton, which is about 40% better price performance than the other x86 processors. And you're seeing it again on the custom silicon on the AI side with Trainium, which is about the same amount of price performance benefit for customers relative to other GPU options. And our customers, to be able to use AI as expansively as they want, and remember, it's still relatively early days at this point, they're going to need better price performance, and they care about it deeply. And so, I mentioned earlier the momentum that Trainium 2 has, and I think that for us, as we think about Trainium 3, I expect Trainium 3 will be about 40% better than Trainium 2, and Trainium 2 is already very advantaged on price performance. So we have to, of course, deliver the chip. We have to deliver it in volumes and deliver it quickly. And we have to, continue to work on the software ecosystem, which gets better all the time. And as we have more proof points, like we have with Project Rainier, with what Anthropic is doing on Trainium 2, it builds increasing credibility for Trainium. And I think customers are very bullish about it. And I'm bullish about it as well.
And our next question comes from the line of Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks for taking the question. I'll stick with basically the same topic, Andy. But can you just talk a little bit about the architecture of Project Rainier and how it's differentiated, and what that means for customers and for AWS? And do you expect Rainier to expand beyond Anthropic? And how do you replicate Rainier with Trainium 3 chips? Thank you.
You can see the S&P has recovered on the earnings calls.
What is Anthropic around Project Rainier is, really is the Trainium 2 chip, which, we've built first of all, we built a very large cluster that they can use in a very expansive way. And it's not simple to be able to build a cluster that has 500,000 plus chips going to 1 million. That's an infrastructure feat that's hard to do at scale. And so, some piece of it is the infrastructure capabilities that we've built over a long period of time in AWS that is, unusual in the industry. But it's just also the performance of the chip and the price performance, which both of which matter. And I think that Project Rainier is something that is specific for Anthropic, but we have a lot of other customers who are interested in employing large clusters of Trainium chips that we're going to hopefully give them a chance to do so with Trainium 3.
And the next question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. I want to ask about two topics, groceries and then how to think about headcount in the future. And on groceries, I want to, the perishables, I think last quarter you talked about 70% or something of users had never purchased from perishables from Amazon before. Just talk about whether I think you used the term game changer before. Does this mean that maybe you no longer need to do Amazon Fresh stores? You always had this DVD delivery van density advantage, and have you kind of reached a point, you think, of scale and speed that you really can change people's habit and really have them consider Amazon as one of their first grocery options? Do you really feel like you're at that point? And then secondly, just on the headcount, given some of the recent news, just talk to us about how you think about headcount going forward. Are you seeing is the level of efficiencies that you're getting from AI such that you can keep headcount relatively flattish for the foreseeable future? Just talk about the pros and cons, or the wins and losses in terms of that headcount going forward. Thank you.
Yeah, so I'll start with grocery, Mark. We have a very large grocery business. If you look at our entire grocery business, if I don't even count Whole Foods Market and Fresh, in the last 12 months, it's over $100 billion of gross merchandising sales, which would make us a top 3 grocery in the U.S. A good chunk of it is a lot of the items that you'd find in the middle aisles, so consumables and canned goods and pet food and health and beauty. Very significant, that continues to grow at a very good clip. But then, we also have Whole Foods Market, which is the pioneer in organic foods, which is also growing at a faster clip than most grocery companies, and with an attractive trajectory on profitability. And we'll expand our Whole Foods physical presence over the coming years here. And I'm also very excited about this new concept, Daily Shop, that we have, which is a smaller version of Whole Foods in urban settings, which we have 3 that we've launched that are off to very good starts that you should expect to see more of as well. Now, we have always been, as you referenced, we've talked a lot about having a larger mass physical presence. And we continue to experiment with various formats. But the one that we are most excited about is what you referenced, which is the ability to provide perishable groceries with same-day deliveries. And if you think about how many of our customers are buying from us multiple times a week, and who are buying things like shampoo or detergent or paper cups or water, where the ability to add milk and eggs and yogurt and other perishables to their order and have it live in the same shopping cart and then show up a few hours later is very compelling. And we started with a few markets about a year ago, and we were really taken aback at the adoption, not just the number of people that started buying perishables from us very quickly, but how often they came back downstream to buy perishables and groceries from us in the future. And so we've now expanded that to 1,000 cities around the U.S. We'll be in 2,300 by the end of the year, and it's really changing the trajectory and the size of our grocery business. And I also believe that this many years tradition of the weekly stock up, grocery stock up, is changing, and I think we're a big part of that, and I think there's a lot of potential there for the grocery side. It doesn't mean that we won't continue to experiment with other physical formats, but we're on to something very significant with what we're doing with perishables from our same-day facilities. And then on your headcount question, what I would tell you is, the announcement that we made a few days ago was not really financially driven, and it's not even really AI driven. Not right now, at least. It's culture. And if you grow as fast as we did for several years, the size of businesses, the number of people, the number of locations, the types of businesses you're in, you end up with a lot more people than what you had before, and you end up with a lot more layers. And when that happens, sometimes without realizing it, you can weaken the ownership of the people that you have who are doing the actual work and who own most of the two-way door decisions, the ones that should be made quickly and right at the front line, and it can lead to slowing you down. And as a leadership team, we are committed to operating like the world's largest startup. And that means removing layers, it means increasing the amount of ownership that people have, and it means inventing and moving quickly. And I don't know if there's ever been a time in the history of Amazon or maybe business in general with the technology transformation happening right now, where it's important to be lean, it's important to be flat, and it's important to move fast. And that's what we're going to do.
And the next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Wanted to know, Andy, if you could reflect on the opportunity that's continuing to present itself in terms of rolling out more robotics and automation and the broader theme of physical AI across your operations, and how you should be thinking about that as a driver of potential efficiencies, but also as a driver of the ability to possibly reinvest back in the business over the long term. Thanks so much.
Robotics is a very substantial area of investment for us. We have over 1 million robots in our fulfillment network at this point. And I would say that while that's significant, we have a lot of invention in flight. So I expect that we'll have more over a period of time. Robotics are very important for us and for our customers and for our teammates because they improve safety, they boost productivity, they increase speed, and they let our human teammates focus on problem solving and what they do best. And we expect that our people will remain at the heart and the center of our fulfillment network, as they have from when we first started working on robotics. And we expect that over time we will have a fulfillment network where robots and humans complement each other and work together. But I think you're going to continue to see us invest very significantly in robotics. It's going to help on the safety, the productivity, the speed, and ultimately some of the cost pieces, which will allow us to continue to improve the customer experience.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed with your question.
That's not the answer he wanted to hear.
Thank
Definitely
you.
not.
How does Amazon think about agentic commerce going forward, and how do you think Amazon will serve customers using agents to purchase goods on Amazon in the future? Thank you.
I'm very excited about, and as a business, we're very excited about in the long term the prospect of agentic commerce, and it has a chance to be good for customers. It has a chance to be really good for e-commerce. And I think if you know what you want to buy, there are a few experiences that are better than coming to Amazon. But if you don't know what you want, it's a physical store with a physical salesperson still has some advantages. Obviously, lots of people do it on Amazon all the time, but you very often want to ask questions and get help narrowing what you're going to look for. And as you keep asking new questions, having a whole bunch of different options presented to you. And I think AI and agentic commerce are going to change the experience online, where that experience where you're narrowing what you want when you don't know is going to get better online than it even is in physical environments. Now, we obviously have our own efforts here in agentic commerce. We have Rufus, which I talked about in my opening comments, which is continuing to get better and better and used more broadly. And we have features like Buy For Me, where we will surface on Amazon even items that we don't stock that other merchants have. And then if customers want us to go and buy it for them on those merchants' websites, we will do that. And both of those have been successful for us. But we're also having conversations with and expect over time to partner with third-party agents. And I think that it reminds me in some ways of the beginning of search engines many years ago being sources of discovery for commerce. And, you had to kind of figure out the right way to work together. And today, search engines are a very small part of our referral traffic, and third-party agents are a very small subset of that. But I do think that we will find ways to partner. We have to find a way, though, that makes the customer experience good. Right now, I would say the customer experience is not good. There's no personalization. There's no shopping history. The delivery estimates are frequently wrong. The prices are often wrong. So we've got to find a way to make the customer experience better and have the right exchange of value. But I do think that the exciting part of this and the promise is that AI and agentic commerce solutions are going to expand the amount of shopping that happens online. And I think that's really good for customers, and I think it's really good for Amazon, because at the end of the day, you're going to buy from the outfit that allows you to have the broadest selection, great value, and continues to deliver for you very quickly and reliably. And I think that bodes well for us.
And our final question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Thanks. Good afternoon. I guess first on AWS, following up there, how much of this acceleration is driven by core infrastructure versus AI workload monetization? And I think part of it is trying to understand how important newer services like Agent Core are becoming in bringing enterprises to AWS to build agents. And then I guess secondly, regarding the acceleration in advertising, if you could potentially disaggregate the core advertising contribution versus DSP and Prime Video, that would be helpful as well. Thank you.
Yeah, I'll start on the AWS side. We are seeing, we're really pleased with the results from this quarter. 20% year over year on a annualized run rate of $132 billion is unusual. And we have momentum, and you can see it. And we see the growth in both our AI area, where we see it in inference, we see it in training, we see it in the use of our Trainium custom silicon. Bedrock continues to grow really quickly. SageMaker continues to grow quickly, and I think that the number of companies who are working on building agents is very significant. I do believe that a lot of the value that companies will realize over time in AI will come from agents. And I think that building agents today is still harder than it should be. You need tools to make it easier, which is why we built Strands, which is an open source capability that lets people build agents from any model that they can imagine. But even more so, when you talk to enterprises or companies that care a lot about security and scale, they're starting to build agents, and they don't really feel like they've had building blocks that allow them to have the type of secure, scalable agents that they need to bet their businesses and their customer experiences and their data on. And that's why that was really the inspiration behind Agent Core, was to build another set of primitive building blocks like we built in the early days of AWS, where it was compute and storage and database. We defined a set of building blocks that you needed to be able to deploy agents securely and scalably that we provide in Agent Core. And when we talk to our customers, it really resonates. There is not anything else like it. It's changing their time frame and their receptivity to building agents. And it's very compelling for them. So I do think, the combination of what we're doing to enable agents to be built and run securely and scalably, as well as some of the agents that we're building ourselves that our customers are excited about, are compelling for them. And, I think the other place we see a lot of growth in AWS also, is just the number of enterprises who've gotten back to moving from on-premises infrastructure to the cloud. And we continue to earn the lion's share of those transformations. And, I look at the momentum we have right now, and I believe that we can continue to grow at a clip like this for a while. I think on the advertising side, that is also an area where I think collectively we feel very pleased about the progress. Every single one of our advertising offerings this quarter grew in a meaningful way. I think there's a few things going on for us. We have what I think of as a pretty unusual full funnel offering. And if you look at the top of the funnel, which typically tends to be awareness building and broad scale, to be able to use our own, Prime Video and our live sports capabilities, as well as going all the way down to the bottom of the funnel at point of sale, being able to use sponsored products. That's, most people don't have a full funnel offering as robust as that. And then when you layer on top of it, the combination of the audience curation and development we can do, along with the advantage measurement, it just all leads to a return on advertising spend that's very unusual. And I think there are multiple places where we can expect to continue to grow. One is, in our stores business. I still think, if you look at the worldwide market segment share of retail, still 80 to 85% of it lives in physical stores. And that equation is going to flip over time. And I think AI is going to only accelerate that. So I think we have a significant opportunity still in our existing stores. And then I think video, we've only been at this for a little bit of time, but it's already a very large amount of advertising revenue, and we're still relatively early stage. I think that will continue to be a big area of growth. And then as you reference, the amount, their demand side platform, or Amazon DSP, that is growing really quickly as well. And some of it had to do with the fact that we had some features. We always had a number of the core components people wanted around some of our properties, the measurement capabilities, Amazon Marketing Cloud. But we lacked some features for a while as we were building out our DSP that customers told us mattered. And the team over the last 20 months have closed those gaps in a very significant way, so that now people feel like our DSP is fully featured. And then you look at some of the partnerships that we've done. The Roku partnership gives us the largest connected TV footprint in the US. And you layer on top of that what we've recently done in providing our DSP customers the opportunity to integrate with the ad inventory in Netflix and in Spotify and in SiriusXM. It's powerful. And so we are growing very quickly on the demand side platform. So very optimistic about what we're doing there. We've continued work to do, obviously, but I don't think we're close to being able to grow there.
Thanks for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to speaking with you again next quarter.
Wow, that was interesting. What do you think? I put a new poll up. Let me know. You listen to the earnings call. You listen to the guidance. You've been watching it all evening with me. Let me know, what do you think? Is it a buy, hold, sell, or are you undecided still? Let me know in the poll. We'll wrap it up shortly. I just see some news coming from Rivian. The first Rivian electric delivery vans have arrived in Canada as Amazon announced that 50 vans are hitting the road to serve the Vancouver area, marking an exciting milestone in our 5-year history of operations in Canada. So just a little Amazon-related update from Rivian. Let's have a look at the markets, what is going on, and we're going to wrap it up. Don't go anywhere. When this event ends, it will take you to my previous event. I was talking about a new investment opportunity and about another earnings call, which could be very exciting next week. And we are exclusively covering this company. Well, I am with Martyn and Sensei, but we are exclusively covering this company and bringing you pretty much behind the scenes information and updates very often and regularly. So what the market has been doing, S&P slightly up, Nasdaq recovering from today's losses, Bitcoin, XRP and Ethereum recovering, gold and silver sideways. Let's have a look at the stock charts. Amazon, very nice run. What are we, 13% up? So since the market closed, if I go here, go all the way up here, we were 14% up, now we are 13% up. So congratulations everyone who made money today. Amazon, I think it was a lucky pick for this event. Let's have a look at Apple. Once we get this out of the way, Apple, not so great. We know the Chinese sales, Chinese market was not very good. What is Strategy doing? Let's refresh this so we get a fresh numbers. Strategy still up since the numbers went out. We got Coinbase. Let's refresh this as well. We got the fresh numbers up as well. What else we've got? Netflix. Netflix announced 10-1 Stock split, 10-1 stock split. The market seems to be liking it. Nice upside today. 3% up. Very good. We've got Tesla. Tesla after hours trying to slightly push up. No massive reaction. Google. I will fix it. I'll fix it. Don't worry. Next time you will see better layout. Google is up from after hours, from after the closing bell. Meta pushing up as well. Look at this. Look at this recovery after hours. That is all on the back of Apple and Amazon. Yeah, because somebody asked me, how is Microsoft, or how would Microsoft go up? So you can see it. That is all on the back of Amazon and Apple results. And S&P, the S&P 500 up as well. As you can see, we have recovered today's losses. Tomorrow we might see a nice green day. What did you say? What did you say in the chat? I put a new poll up. Is it buy, hold, or sell after you've listened to the earnings call? Let me know. But let's have a look at the previous one. Tomorrow, a red or green day. 71% think it's going to be a green day. 18% red, 11% think sideways. Michael Anthony says Amazon is moving up. That layoff of 14,000 people looks like a slowdown. And why all of these layoffs? There was a question about the layoffs, but I'm pretty sure it wasn't the answer the analyst wanted to hear. I think he was asking about something else, or he wanted to hear something else. Songs for Space, 36,000 Amazon workers laid off only in the beginning. Yes, I agree. They have to lay people off. Shopping businesses isn't profitable, and they have lost pricing power, so they can hyperscale like they did to gain market share. James, thank you. Songs for Say, what Songs for Space, whatever you do, zero talking about how bad the online shopping is doing. I'm done commenting. Just no, thank you, thanks for the commenting. Netflix, we covered it. 10-1 reverse split, sorry, stock split. You having a strong day today. We'll have a look into that next time. Songs for Space, wow, stock split. David Hensley moderating. Big Mouth Rob says Amazon laying off, just called me to come to work. Well, nice, congratulations. And J Boy Sev, monthly close tomorrow. I expect some market makers games. I wouldn't be surprised. Yeah, thank you very much for joining me. Stay where you are. Tomorrow morning, Sensei, 2 hours before the opening bell, he will give you analysis of this Coinbase strategy. He will tell you about crypto. In the afternoon, I'll be live with more eVTOL updates. There's no earnings tomorrow after hours. Tomorrow morning, nobody booked any earnings either. So tomorrow, as per normal. Next week, big eVTOL week in terms of earnings. Tuesday, pre-market, eVTOL, EVTL, ticker symbol EVTL, Vertical Aerospace, our exclusive company. We are covering and bringing you updates, pretty much behind the scenes information and whatnot. Then Joby, Wednesday after hours, Thursday after hours, Archer Aviation. The whole eVTOL market can take off to a massive rally. That's it. Stay where you are. It will take you to one of the next week's earnings, breakdown and outlook. Stay where you are. I'll see you tomorrow. Thank you very much for joining me. It was a great event. Take care of yourselves and each other.